trading session. Right now, WTI is at $58 per barrel and the Brent is $64 per barrel. Of course, they're trading higher compared to the previous weeks, but today the WTI hit also $60 per barrel, a little bit earlier. Do you think this 1.2 million barrels output cut is enough in order to stabilize prices? Also, I mean, it's for the following 9 months, so that's a pretty important step. So if we can call it like that, do you think this is enough?
For the meantime, I think it is enough, but we need to wait and see. What we saw today on the market is a marginal response that happened just as a result of taking a decision. But the market, by the way, they were already expecting this decision right from the G20. We need to wait and see how the demand will grow within the second half of 2019 and beginning of 2020. And we also need to see how the U.S. shale will increase. The major target for OPEC now and OPEC Plus is to reduce inventories from the OECD and the United States. If these inventories decline, that means the cuts being made are sufficient. But it's still there is not not certain that these cuts are sufficient. Some OPEC ministers have also expressed that they are happy to even deepen the cut, which shows that OPEC is not actually 100% sure if these cuts will be enough. But for the meantime, they have extended it for 9 months, waiting and see if the market will balance and bring the inventories down.
Youssef, on the other side, the U.S. is ramping up its shale oil production. Is this something that that is going to have a major impact also in the following months, of course, on the oil price?
Absolutely. If shale continues to increase, it will certainly keep pricing not from limit the rise in oil prices. Always the reports coming out from the EIA, the U.S. Energy Information Administration, they have been affecting the prices very much within 2019, just because the significant rise of U.S. shale and the rise in the stocks. However, if China-U.S. trade deal is sorted within this year or next year, then that could be a good news for the OPEC market, which could increase demand and could possibly bring prices to the level that will be good for OPEC producers and consumers.
But what's the maximum level at this point, I mean, in terms of prices for 2019, since the output cuts are going to be this one till the first quarter of 2020? So what kind of maximum prices can we imagine?
Well, I don't think prices will rise too much. But I think they will, the cuts being made will prevent them from a significant decline. I don't think they will rise very much because, again, there is uncertainty on demand and there is a continued rise in shale oil production. So I think it could rise by about, let's say, for Brent from now until end of 2019 and beginning of 2020. I see a price that is within the range of 70 plus or minus. So, but I don't think it will hit 80. From our own forecast.
All right, thank you very much, Youssef Alshammari, Editor-in-Chief, C Markets. Thank you for joining me and have a great evening, Youssef.
Always a pleasure. Thanks for having us.
Well, let's have a very quick look at the U.S. equity markets. How are they performing right now? Pretty stable performance despite this